Welcome back to the deep dive. Today, we're looking at a space most of us only ever see from the sidewalk.
Oh yeah, the super prime property market.
Exactly, specifically London's market. We're unpacking a new report from the intermediary, which looks at Savills analysis. And it's all about this sudden, massive surge in homes selling for over £5 million at the very end of 2024.
Right at the finish line.
Yeah. Okay, let's unpack this because whether you follow real estate closely or, you just track global wealth movements, this market just pulled a rather unexpected turnaround.
It really did. And the contrast is honestly the story here. I mean, for the first 9 months of 2024, the top end of the London market practically flatlined.
Flatlined.
Yeah, overall transactions were down noticeably from the previous year, dropping about 16%. Things were looking quite sluggish.
Right, so buyers and sellers were just holding their breath.
Exactly. But then Q4 hit, and the dynamic completely flipped. Buyers suddenly crammed a year's worth of mega deals into just a few weeks.
Just a few weeks.
Yeah, it was a sprint. And that end-of-year push drove the average price of a super prime property over £11 million, which is actually the highest average we've seen since 2019.
11 million, wow. So what caused that initial deep freeze and then the sudden thaw?
Well, looking at the insights from Savills Director of Research, Nick Maud, it essentially came down to a cocktail of caution.
Right, because throughout most of 2024, the market was waiting on a few major variables to settle down. You had the general election, the autumn budget, an additional stamp duty surcharge for second homes, and those changes to the non-dom taxation rules.
Right. Those rules impacting wealthy foreign residents.
Exactly. And markets simply hate uncertainty.
They despise it. Those are major variables for anyone moving that kind of capital around. But what's fascinating here is how quickly the dam broke once that uncertainty cleared.
As soon as the budget's actual impact was finalized, it was like a starting gun went off.
It really was.
Mm-hmm.
Alex Christian, who co-heads the Savills private office, shared a detail that captures this late-year frenzy perfectly.
Oh, I saw this in the report. In just the last 10 days of December,
Yes, just 10 days.
pragmatic vendors and eager buyers pushed through 5 separate mega deals.
Totaling over £120 million?
They just wanted to lock things in before the year closed out. A
Right.
serious end-of-year shopping spree.
Absolutely.
Here's where it gets really interesting, though. Where and what they are buying is shifting. We actually have a neighborhood rivalry playing out.
Oh, yeah, the classic London turf war.
Right. Belgravia just officially dethroned Chelsea for the highest proportion of those 5 million plus sales. They took 13% of the market.
Which totally makes sense when you look at the changing demographics. Belgravia is drawing a younger crowd right now.
Mostly thanks to all the new retail and restaurant investments in the area, right?
Yeah, exactly. And it's changing what they buy, too. 63% of these recent sales were houses.
Which shows a really strong domestic demand. And buyers are heavily prioritizing turnkey properties.
Yeah, they do not want to wait around to renovate, especially since planning restrictions mean the pipeline for building sprawling, new lateral apartments is shrinking.
That shrinking supply of large single-floor apartments is a crucial point if you're tracking global asset trends.
Definitely. If we connect this to the bigger picture, it is all about spotting historical value. Right now, prime central London prices are sitting about 20% below their historical peak.
20%, which means even at £11 million,
It looks like a relative bargain.
right, to a global investor, it's a steal.
Precisely. In historical terms, London real estate is offering significant value right now. Savills is even forecasting a nearly 10% increase in these property values over the next 5 years.
Wow, almost 10%. So what does this all mean for you listening?
Ultimately, the superprime market runs on its own distinct logic.
Yeah, heavily fueled by domestic appetite and sudden shifts in buyer confidence once the regulatory dust settles.
Exactly.
But before we wrap up this deep dive, I want to leave you with one final question to mull over.
A parting thought.
Right. If the world's ultra-wealthy are suddenly rushing to lock in these prime properties while prices are 20% below their peak, what does that signal to you about the long-term perception of London compared to other emerging global wealth hubs?
That really is a great question.
Something to think about. Thanks for joining us on this deep dive.